A very gentle and warm welcome to you, baby dolls. We are looking at the ChainLink price here. I'm going to go through Bitcoin, Ethereum, and some juicy updates, especially on the real estate market, which might be capitulating right now. But first, we are looking at ChainLink, and as you can see, we have been stuck in this Bitcoin and Ethereum range for quite some time. It's been a very quiet weekend. Nothing's been happening. But if we follow the juicy, the magical Mt. Gox Ponzi cycle, if we move our mouse here, we seem to have an upward spike around 1st, 2nd, or 3rd October. Yes, this makes absolutely no sense why this should happen, but hey, I don't make the rules. Let's wait and see if that happens. By the way, there is a Bitcoin ETF decision around middle of October. Wouldn't it be fascinating if they actually approve this one? Now, back to the Linky Boo. Okay, here I am to tell you. I wish I had a friend who literally has been speaking to me about ChainLink every day for the past 18 months, who told me to accumulate cheaper prices than him. And don't forget to like, subscribe, press the belly button and all. We're here to shock the algorithm, friends. I've made so many of those ChainLink videos. And then I wish I made 1,000 posts, right? 1,000 posts. And then I wish I made 20 YouTube videos. Oh wait, I did. I have been making them. It's still going up. This is nothing, by the way. I put these 15-minute charts just because people get excited. They look like a big move. They're actually nothing. This is absolutely nothing. To me, ChainLink should be 100 billion market cap. That's about a 30x from here. The 20 to 30x, right? Not financial advice. Do whatever you want. Sell everything and go buy JPEGs. Go buy the top of the real estate market if you want, or go buy bonds, okay? See how that works out. Go consult financial advisor. I think it should be worth 100 billion market cap. Well, that's like a $200 link. That's just to me. I'm holding for something greater than that. I think it can hit $1,000 one day. I don't know if it's going to happen in this cycle. It probably won't. We're probably going to get scammed by the Roca Negra ETF, but that's just the long-term goal. I like doing this, friends. I like the idea of, if I ever make profit somewhere, parking money in something where even if there's volatility, I don't have to get worried that it's never going to go up. That's just me. Other people like losing everything. I also wish I had a friend that instead of succumbing to all the other Twitter shill scum, they gave me a 10-year plan of ChainLink with confidence to hold. As I've told you, trillions and trillions of dollars are rotating around out there in the traditional finance system, and they need somewhere to go. ChainLink is the chosen one from the bug eater overlords. The CCIP tech is here. CCIP is the secret bull market weapon. It is the best trustless high utility bridge that basically links all chains. It's in the name. It's called ChainLink. I also wish this friend of mine emphasized that meme coins have a short life cycle where 95% of people lose and get wrecked badly. I wish someone was out there here telling me. But look, you know these other people, friends, you're going to learn in life, there's two types of people. There are people who, like me, they try to help you along the way, even if you are rejecting the truth. Okay, then there are other people who are scum. The scum will wait until you get destroyed and then say, I told you so. The scum will hide stuff from you. They work in the shadows. They're sneaky. They won't tell you stuff. They won't tell you the truth. And then, you know what the scum will do? When you get destroyed, which you will, just like most of the masses do, they're going to go blame it on you. They're going to gaslight you. They're going to go, oh, but you knew the game. Oh, you knew altcoins are risky. Oh, you knew these meme coins. You know they're risky. Of course you did. What were you expecting? Oh, or you just got to hold more. That's what they keep saying, okay? You don't have to take my word for it. You wait and see, all right? You wait and see. I also wish I had a friend who emphasized that by buying long-term blue chips in the year before the Bitcoin halvening, it works out pretty good. The year before the Bitcoin halvening. Is this the Bitcoin halvening year? No. That's what we're waiting for when we want to go juicy long on some new creation altcoins. By the way, I love to fart. Here we go on this cup. And now this is a very interesting topic. We're looking at real estate capitulation. Airbnb owners. So if we see this, okay, now obviously this is just highlighting one area in America. It's not everywhere, of course, but I'm just showing you this is the real estate market. It's the easiest market to time. Why? It's because when it turns forever, and everybody in there is in the la-la land for like a long time. Like, can you imagine JPEGs? Imagine your Bored Apes were still $500,000. while the whole crypto market has crashed after 1 year. That's what the real estate market is. They're literally just sitting up there. Why? It's because people are so emotionally attached to the house. They see the house, they go, wow, I've had so much memories here. There's a roof here. Look at all these other people in the property market. The government can never let it down. Now, but here's the thing, right? Picking a top in the real estate gets you nowhere. One, you can barely short it. And two, the dips aren't that long. Why? It's because by the time they start dipping, government goes, uh-oh, we're going to zero again. Let's print and deal with the problem again in the next 4 years. They always keep kicking the can down the road. That's why it's a mugs game. There's really no point playing it. But you can play it by avoiding excess leverage. Unfortunately, a lot of people, like it's too late to say that now. I mean, we're at the end of the cycle, right? And everyone's about to get destroyed. So US real estate is turning fast. Like this house now listed for $775K, but look what happened. It started to be listed. So this guy bought it for 730 grand. All right, 730. Now the person paid 130 for it. Whoop-de-doo. Okay, went up with everything. Okay, he immediately listed. So he bought it for 730K. He listed it for almost $1.6 million straight away. Then he has to drop it down to 1.2 million. Then he has to drop it down for 990K. Then 850K. Then 800K. Then 775. But look what happens next. Default. Uh-oh. Like literally wrecked. So capitulation. Over leveraged. Over everything. Default. 800K. You know, these people just try and take their losses. It's finished. Like it's game over. Everybody is stuck. Everybody's frozen. But this is what the Fed wants. This is what central banks do. This is how the fiat system works, friends. They've told us this time and time and time again. They tell you this. But the problem is the crowd will refuse to ignore the leverage. Why? Because everything is priced so high. You need to be in leverage. You need to go to the bank and be a slave and get that chain around your neck. So this person got obliterated. I'm now telling you, how many times, man? I've been telling you right now. Real estate is in complacency. What is complacency? Here we go, the Wall Street cheat sheet. The complacency part is, look here. Complacency is euphoria crashes down. Maybe we happen to have that in the past 2 years, right? Whatever it was. And then we have this recovery. This is the real estate market. This is like everything else, by the way. See, they move so slow. Now we're in complacency. Complacency, we're like, oh, we're like doing this. Now, complacency is everyone realizing, uh-oh, the prices went down, but I'm not emotionally affected. Now, they don't have this self-awareness. Nobody says that. No one in the real estate market is saying that. They're saying, don't worry, new bull market, everything's fine. There's also this a massive amount of cope where they're saying, don't worry, everybody locked in their rates much lower, so nobody wants to go trade a home. Yeah, my behind, okay? I don't believe any of these junk, friends. This is literally, how many times have you heard this before? This is like people saying, don't worry, no one's going to sell their Bitcoin at minus 70% because they're holding for so long. How many times do we hear that? No one will sell their Bitcoin under $20,000 because they've held it for so long. No one will sell their Hex under 90% down because they've held it for so long. They're so rich. Wrong. No one will sell their PulseX under day one sacrifice because they've held for 2 years. Wrong. We all got lied to. It is all emotional speculation. All the marketing is BS, friends. It's predatory, okay? It's predatory marketing. Don't worry, it's coming. So if you're out there, you just got to get ready to wait, you know? So this person even spotted this type of junk out here. Now, there are many examples out here, many countries out there. So this is what the next 24 months is going to look like. And mark my words, okay? Mark my words. So in the next 24 months, the property scum, okay, you know who they are, real estate scum, the boomer scum, which they are the same thing, but we've got to put them in there too. The Generation X scum, right? Those parts of the Gen X age bracket who are very anti-crypto, pro-stocks, and pro-property, those ones, okay? All three of these categories of scum, they have spent the last 1 to 2 years pooping all over crypto and especially NFTs. Now, of course, NFTs, everybody poops on NFTs, right? But they was pooping all over crypto, okay? Now, here's the thing. They're going to be rioting first. They're going to be showing up Monday morning, 7 a.m. at the offices. They're going to be rioting for yield curve control. They're going to be begging for a U-turn. They're going to be crying for it. It's coming. It's coming. Don't forget, the US Fed, they are lying reptilian scum. Ignore their dot plots. What I mean by their dot plots, well, whenever every once in a while, they do like these plots where they get the average expectation of what the Fed members expect going on. And what do they expect? They said, don't worry, we are going to hold rates for 12 months. No cut for 12 months. That's absolutely the biggest lie I've ever heard of all time. Okay. The unemployment rate is it bottomed at like 3.3% or 3.4%, around there, 3.4, 3.3. Anyway, when it goes up by 0.5%, the Fed cuts rates in 100 out of 100 times. Every time in the past 70 years, whenever unemployment rate starts spiking, they go, uh-oh, we've started the whole train. Okay, it's finished. Straight away. Why? It's because they know. You're thinking, okay, why would they cut rates? Well, they cut rates because they know there is a 12-month lag of their moves. So they know every time unemployment rate, people start to lose their jobs, they go, shit, we've got to cut rates now because in 12 months, it's going to start to take to effect because the damage of the people losing their jobs today is from 12 months ago. By the way, all the economists and people, they talk to the Fed about this, and the Fed's like, oh, what's going on? They know what's going on, bro. You think they know what's going on? They have access to the money system, friends. They have UFO technology. They're trying to psyops the whole population into doing some fake alien invasion next. You honestly think they're like, golly gee, we couldn't see these 4 charts that a guy wrestling crocodiles part-time in his dusty room with pointy elbows in Australia. Wow, we couldn't see that these things are forward-looking indicators. Come on, man. Don't believe them. So don't forget, the money printer will be activated again. And it's not going to be crypto people crying, nah, we've already lost everything. It's going to be the weakest of the weak. It's going to be the emotional money in the houses and the real estate. Those are the absolute weakest. Why? It's because baby boomers are in politics. Baby boomers like the houses. Baby boomers are the ones who riot first. And guess what, friends? Guess what? Young people barely vote. So who goes and votes? Who's got nothing else better to do? It's the boomers. The boomers go and vote. So the politicians always know that they've got to appease the boomers. The boomers are the ones who go out there. They actually got the money, by the way. The boomers are the one who are donating. The boomers actually have all the wealth. So that's what they know what they're doing. And they own all the real estate. So when I put all those facts together, you're like, okay, that makes complete sense now. They're not going to go save crypto. It's for young people. They don't care. Okay, so all the boomers in politics, in real estate. Real estate turns at the very end, which is what we're seeing right now. They're illiquid NFT JPEGs, which is what they are. Now, I know some people think that's actually a metaphor. No, most property is just an illiquid NFT JPEG. This is, okay, what I'm about to tell you blow your mind, and I learned it off Da Vinci. Is actually true. He was the one I first learned it off, Da Vinci J15. So the price of a house, okay, yeah, it can disconnect for a while, but it's fundamentally linked to one line. Do you want to know what that line is? The average worker's wage in the suburb. Okay. Now, when you first hear it, you think, okay, I knew that. No. You got to really think about that. A house, no matter what the house does, literally, no matter what it does, no matter how much you've renovated in there, no matter what you've put in there, it's fundamentally got a gravity line. That gravity, that magnet, is the average worker's wage, whoever lives in the neighborhood. Okay, so yeah, it disconnects for periods of time. Of course it does. Why? There's leverage. There's people overspending. There's jobs working around everywhere. People are like, basically bunny hopping jobs, etc. But once it starts to go the other way, you mean revert back down. That is where it's always going to mean revert back down. Now, here's the thing. Are they going to let it mean revert back down? Or, they don't have to. They don't have to at all. I'm not going to pretend to be silly. In China, they have 99-year loans. So they can let this keep going on and on and on. How do they do that? You see this line here, this gap, where it's meant to crash down, but they let it keep going up? Well, that's a loan given to your children. That's a loan given to your grandchildren. That's what happens in China. They just extend it out. Now, in my opinion, what do you think is more likely? Do you think they're going to let it gravitate back towards mean fair value? Or do you think they're going to say, hey, you can now get a 50-year loan if you let your kids take on the loan as well? I reckon that's what's going to come next. That's personally what I think in a lot of these areas. It might take a while to get there, but that's what happens in China. That's actually the future. I mean, it works for China, right? So that's why. Now I've explained this to you. Let's read this, right? Wages did not catch up in the past 10 years. Almost like the past 20 years. Wages haven't caught up at all. Actually, if you look at the 1971 chart, yeah, we haven't actually moved up to 1971. It's been a long time. So real estate is going to get butchered continuously. The only reason, friends, like The only reason why people, like, why real estate hasn't turned over is the unemployment rate. That's it. Your unemployment rate just reflects the fact everybody has a working income asset, which is your job. It's an income. It's an asset coming in. Basically, it's bringing you money every year. But once you start to question that, I mean, it's all over. It's literally all over. Just the cascades happen. Once people get the fear, it's over. Look how fast crypto started selling. Look how fast stocks started selling before they had to do the scamming and the save it. But property, you can't go and do this saving with all this manipulation stuff, right? So this is the last times they've held the plateau. 8 months, 14 months, 7 months. Now, I want you to know something, though. This is interesting, okay? They can hold rates and do yield curve control. They can do that. So they can stop rates, and then they can basically say to the long end borrowing interest rate, they can say, hey, that's it. This bond is not allowed to sell off anymore, which means the yield. So they go to a very, very long end yield. Let's say the 30 year, for example. Let's say the 30 year fixed is 8%, okay? Whatever it is. I don't even know what it is, okay? Let's say it's this 8%. What they can say is they go, okay, you are not allowed to go any higher than this. You know what it means is, it means they've gone to the money printer, okay? They've gone to the money printer. And because the price and the yield's inverse. So if this is 8%, that means the bond price is actually crashing to the floor. And surprise, surprise, I have the iShares. This is the 20-year treasury bond. You see this down here? So this represents a giant yield. Now, I don't know the exact yield. They add a premium for different mortgages. But basically, because it's down here, everyone's capitulating. The government can say, they go, well, the US Fed says, you know what? That's it. This floor? You are not allowed to go under that. So what do? They're doing QE. It's just that the QE done at the top here, okay, that type of QE was they print money and then they go hit market buy. That's what it is. It's literally like if Tether printed $1 billion and then they went and they started swapping all the coins on Uniswap. That's the equivalent. Tether printing and they go and start swapping everything. That's their QE. Now, yield curve control isn't where they start swapping. Yield curve control is where they do a Uni V3 limit order. And they say, you know what? We're going to put $1 billion limit order here. And you just see this big, thick book on the bids and then nothing on the offer. So everybody who's selling, they're like, wait a minute. I don't want to sell into anything down here. I'm literally selling the bottom. So they're just going to absorb all the sells. That's what yield curve control is. Now, who wins in yield curve control? Well, they get the best of both worlds. The best of both worlds is they get to control their BS inflation and they don't get to spike everything up with QE money printing. And they get to save the system and save their cronies. Well, it's not really saving the system. It's just kicking the can down the road. Make sure you like, subscribe, press the bell button. All friends, I appreciate every single one of you. Catch you in the next one.